Hello friends and welcome to my YouTube channel Simply Talks, and today I'm going to talk about Ramkrishna Forging. Has the bottom made here, and are we headed much higher from the current levels? So let's get started. First of all, a disclaimer that this is not a stock recommendation, and people taking any position to any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Before I talk about Ramkrishna Forging, here's a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions and eke out answers in greater detail. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from time to time. And once you pay $100 upfront, then you get 1 year access by paying for 10 months. For detailed market or company talk, you can directly email me and we can work things out. Now, the company established in 1981, Ramkrishna Forging is into auto components manufacturing, and they boast of many clients abroad, globally, means world-class clients as well as domestic clients. So they have global presence and spread across 13 locations across India. They build their products, and their clients include Maruti, Honda, Bajaj Auto, etc. If you look at the numbers, and these are June quarter numbers that I'm talking about, then market cap of the company is around 3,000 crores, and the stock has recovered remarkably from the lows of say 15 16 months back. The sales for FY21, this is June 21 numbers. So sales were 417 crores versus 113 crores. So that's a near 4x growth. Profit of 24 crores has come in after a loss of 29 crores. So a complete turnaround in the stock has taken place, and we have seen that in the stock price. So from 300 350 levels, the stock has surged past 900 950 levels, and margins have improved year on year. It trades at around 42 times earnings, which looks slightly stretched, but numbers will keep on improving as things open up, more vaccination is done. Manufacturing sector took the biggest hit in this time. So I think I'm pretty confident that going forward, manufacturing sector is going to come out terms a big time. High combined promoter and foreign institutional holding with 25% free float is there. Pledging has reduced significantly. There is pledging, but very less pledging is left. If you look at the performance, the stock has fallen sharply since Jan of 2018. We have seen that had fallen 65% during the Feb March fall of 2020, but has recovered smartly in the last 12 months. As I have explained, and doubled in the last 15 months from 400, 450 all the way to 900 plus. And results have remained very good. Results have remained subdued till now, but now it has come out with very strong numbers, and things are looking much brighter now, as I am saying that the sales are only going to improve as globally and also domestically things open up. We have seen how the government has talked about opening up all the tourism places for tourist places, and hotels etc would be allowed to work at better capacity than what they were doing at the moment. So I think the manufacturing sector altogether should also continue to do well. So why the slowdown took place from 2018? Basically, the auto industry and the manufacturing sector and the whole Indian economy was under stress from early part of 2018, and it got you can say shut down, just accelerated the decline in FY20, and when we saw that happening in FY20 and 21, and we saw the slam dunk in the stock prices as well. Commercial vehicle segment was even worse hit. In fact, the commercial vehicle sector over the last decade or so hasn't done that well, and we have seen that happening, and most of the ancillary plays which are into the commercial vehicle segment has not done that well. But now things are looking up, and there are more, you can say, freight, more logistical services that will start working. So growth will come into this sector, and basically economic growth will lead to such sectors doing well. And I think once infrastructure sector and everything revives, and we are seeing that happening in the real estate segment as well, I think we are going to see a remarkable growth into this ancillary space, which are related to basically the commercial sector. There was stress, for projection of further stress during the second wave when it hit India of the pandemic in April, May, that another 1 or 2 years may just go away just like that, because things may not open up completely. But now things are improving very fast, and I believe over the next 6 months we could see a big recovery in the auto sector altogether. If you look at the technicals, then there's major long-term support around the 750 region. So it is around 980, 970 at the moment, 900 to 1000. If it goes down, and we are seeing some kind of selling in the market, if it goes down to 900, 850 levels, those will be good levels to buy at. 750 is a strong support, and strong up move is expected above 1000, 1050 levels. I think we could see 25-30% up move if it crosses 1000 and closes above it. It looks extremely strong on charts, looks very good on charts, because if you see that the way the recovery has taken place has been extremely strong from the lows of around 400, 420 levels. See, it may be seeing a false breakout for the moment, and I believe that with the kind of business environment we are in globally, and we are seeing how the US markets have fallen in the last few days, we could be headed lower on the stock, and that's why I'm saying that 880, 900 could be a good level to accumulate the stock. So my call here is, if you have it, then hold on to it. I think the next 3 years would be extremely good. Yes, turnaround is possible over the next 12 months. I believe over the next 6 8 months we'll see the turnaround happening. So FY23 could be very good and very interesting for the company. Yes, if you want to avoid this, I have always mentioned that there are many other top players in the ancillary space, in the pure auto space, that you can get into. So you can look at my other videos on auto ancillaries, and you'll know about it, or live sessions as to which stocks I talk about. This is not one of those, but yet I believe when the sector performs, and you need to understand that the auto sector has not performed, albeit the market have had the last 3 4 months, at least 6 months. Last 6 months has been a huge rally in the market, but the sector that has not performed at all has been the auto sector. So I believe once this sector performs, you'll see even Ramkrishna Forging doing well, and you need to understand that they have a strong hold in the European and US market. So when those markets start doing well and demand picks up for cars and vehicles, and there is economic, you can say, economic movement, then we'll see a lot of, you can say, exports and big numbers from this company as well. Although there are companies, in larger companies in the auto ancillary and in the auto space, that you can look at. It's a good 3 year play, and do not expect immediate reward if you're buying fresh at the moment, because things can change very quickly. This fall can just continue or accelerate, so you may see stock down 8-10% if you buy here. But over 3 years, I see a big, you can say, returns in this stock as well. So this was a video on Ramkrishna Forging. Please like and subscribe my channel, hit the bell icon so you can get my videos straight away when I post it. Thanks a lot for watching.